So one of the best ways in which you can catch the biggest moves in the market while risking just a small portion of your account like this is by trading trend like breakout. So basically in this video I'll be sharing with you very good examples of how you can trade trendline breakout in the forex markets, trading indices, right? So you can see these are all example of breakouts as you see. And when they say breakout, there's usually a very violent move. As you can see here, there's a breakout here that leads to a very violent move which can give hundreds of pips, guys. And you can only risk, you'll be able to risk just a small portion of our account, right? Imagine just entering and then placing your stop loss there and being able to catch a very big move like this, guys, trading breakout. So I'll be sharing with you secrets how you should enter, what to consider to be a valid breakout, where to place your stop loss and your take profit when you want to trade trendline breakouts. All right. Okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. So basically in this video I'm going to be sharing with you how to trade this breakout based on continuations. All right. Okay, so if you look at the market, zooming in from a small term, from a time frame, 4 hours time frame perspective, you are going to see a downtrending market. So in this downtrending market, we have impulsive moves and pullbacks, right? So what we usually call impulsive and pullbacks. Now, one secret you have to understand is that when you see price in the market moving, all right, when price move, price will always pull back, and price will always stop to catch its breath before it continues. So most often or many times, when price is stopping to catch its breath after a strong impulsive move, it usually consolidates to form patterns which will end up breaking out to cause very violent move, which is the next impulsive move, right? So if price move like this, all right, it stops a little bit and catches breath, move, it stops a little bit and catches breath. Okay, but now when it's catching its breath in this situation, what happens is it creates sometimes a pattern. All right, it consolidates, and when it consolidates, it creates what we call support. In this situation, it creates what a diagonal support sometimes in a downtrending market situation. So when you connect like that, for instance, you wait for price to break out, because as price breaks out, it's most probably going to take the next impulsive move. Okay, so that's one thing you should understand if you want to be able to catch very violent or aggressive moves in the market. So if you look at our chart scenario, you see we have the same situation. You see strong moves, price consolidates, strong move, price consolidates, and all of that. So that's why you see now, just looking at these swings, as you can see here. So you see that when price create impulsive move, it always reverses to catch its breath, reverse catch its breath, impulsive move, catch breath, next impulsive move, and all of that, right? So from the example I showed you guys, you realize that in this situation, in this scenario here, we had price pull down and then consolidates. Now in a bigger time frame, you can see a whole lot of, it could be just a small pattern in the H4 time frame, in the daily time frame, and all of that. So you can consider this just to be a small pattern. Like now you can see it's just a small pattern which could just be like a flag. In this situation, you see that price created impulsive move, consolidated, right? So when it consolidates, it breaks out, okay, creates the next move, consolidates. Now you see that it creates a big move, and remember, the bigger the consolidation, that's how explosive the breakout is going to be. So in this kind of situations like this, for instance, you can catch a very big move that can earn you hundreds of pips. Now with the trendline knowledge I've been bringing to you guys in this channel, for those who have been following up, you see that I explain the rules of doing a trend line. So what we simply do is we just pick our trend line here, we connect the troughs or the peaks. These are the peaks up, these are the troughs below, right? So you make sure you touch the bottom of the candle, you touch, and then you drag where you see obvious obvious zones, right? You just try to adjust as much as you can get many touches, all right? And I showed you the right way of doing trend lines so that you don't get faked out. So you simply just connect the troughs like that, all right? Once you connect like that, you already know that, okay, right now you have 1 2 three touches. All right, you now have a trend line zone valid. What you're expecting now is there are two things that you want to have to pay in attention. You have to ensure that the candlestick that breaks out of the zone is what a strong bearish candle in a situation of a downtrend. All right, to show that there's bearish momentum that can push price further. Okay, and then you see signs of bearish pressure. Okay, the candlestick must what close below the zone completely. So if you are watching based on the H4 time frame, you want the H4 candle to close completely. H1 time frame, you want it to close completely. 30 minutes, you want it to close completely. So you have to look at your time and you are watching. So because there are times where the candlestick will move down and might not close below. All right, and if it moves down and breaks through without completely closing, sometimes before the time clocks, maybe exactly at the fourth of the fourth hour, you see that the candlestick might close up again, leaving a long wick. So you have to ensure that you wait for the candlestick to break out completely with strong momentum to show that what the breakout is valid. Now here, what happened? All right, we had a strong momentum candle that actually broke out. You see that for a very long while price has not been able to break out from this zone here. Right, we have anytime it comes here, we have weeks of candle rejecting upwards. So this was a sign that there's bearish momentum. All right, so now what you do now is you look for bearish confirmation. Now you'll see we have another bearish confirmation with a candlestick that is pointing downwards. Now this candlestick means that what it opened above here, the candlestick opened above there, went right down, and then the bears and the bulls were actually pushing to determine what happened after this next bullish candle. But the bears succeeded to push the body of the candle to come and close right below here, which is below the trend line, indicating that what that there is what a bearish pressure. Now what you do now is to take your order. Now we want to take your order. What you do is you come and look at the previous low, which is this zone here. You sketch it out. Right, that's the previous low. You sketch it out. That will be your target. Okay, that's the one way you can target the trades. Okay, and then what you do now is you might also want to determine the size of this pattern. Okay, and then put as your target. But this is one of the best way to target it. So what you do now, you take a short trade. Now you take a short trade in this situation. Let's say you are an aggressive trader. Some people will only wait for price to come back and retest, but most often price might not come back to retest. Now your stop loss should be above that candle. That look at that doji candle that closed below that zone. Okay, that's where your stop loss should be, and then you track it. You make sure your target is around here. So you see this is a very good risk to reward ratio already. So your stop loss is above the rejection candle, and then let's watch how price comes back and then retest in a smaller time frame. You can see this is another retest and then another strong bearish candle confirming that the momentum is moving. So make sure that you enter at a good price, because when you enter at a good price, you are going to get a good stop loss zone. But if you come and enter right at this candle here, your stop loss is going to be wide. But if you miss the setup, only wait for price to come back and retest so that you can get a better entry. So that is how price drops powerfully. Right, you can see this drop. Price has not been able to drop like this for a very long time. That is how you can cash aggressive sell orders or buy orders. So it's the same opposite with the uptrending market, and in any time frame that is the same concepts that apply, because the market is fractal, and when price keeps moving downwards, you can still keep on identifying zones like this. Okay, you can see a zone like this. You realize that price have been rejecting here for a while, so price reject here for a while. You can still connect, right, to connect like that. You see how I do my connection. I ensure that the wicks of the candle, make sure that the wicks of the candle, the trend line just pass at the top of the wicks of the candle. Now what happened here, we had a breakout with strong bearish momentum. Now the next candle was another confirmation with a doji, which the body of the candles closed below this trend line. So when you enter, your stop loss should be above that candlestick there. Right, so when you enter, this is how you enter. Your stop loss should be above this candlestick. Okay, this rejection candlestick. Okay, then you can go left and then you look for where you could also be looking for your targets. Now in situations where you don't see obvious targets, you might just want to sketch out something like that. Okay, you drag down. When you drag down, you're going to see where it ends. Okay, that's where you should be placing your targets. Okay, and you see this is it. Price actually dropped powerfully. As you can see, it dropped and made it right down to the zone. So basically that's how you can trade this kind of breakouts. Okay, you see how I connected my from these troughs below, I connected like that to determine my next target. Since there was no obvious low here, we could find an obvious low, which is this, so that's why we had to target. And that is how you can continue using the same concept, and then you catch many trades as possible. Now the concept is good because if you have one winning trade, guys, I know there are times where you're going to get false breakouts, but there are times where when you get a single winning trade, you are going to recover all the losses because the risk to reward ratio that you are having, it was very high. Okay, so if you drop further, like I said, to smaller time frame, you can see cash opportunities. Like here, these are all opportunities in a smaller time frame. You see it clearer. Right, you can see it clearer. You see strong bearish momentum, price close, rejects, and then you look for sell orders. Okay, now this is another continuation breakout here. Basically this is where price is now, so we are going to be waiting for what price to break out from this. Okay, you just connect and wait. Okay, remember you have to adjust to get as many touches as possible, so you just connect like that and then to get many touches. All right, now you wait for price to break out of it. When price comes now and break out of this, you can possibly have something like this when it comes. Okay, and then breaks out. All right, now if you enter here, remember what's your target, where is your target. So let me pause for 1 second so that you think, where can your target be? So if this was your target, then you are right. Okay, so you can place this, you identify this to be your target. Okay, so if it happens to break out, this is how your stop loss should be. So when you enter, you ensure that your stop is above that rejection candle that you had, and then you can target like this. Okay, nevertheless, you can still have other targets. Maybe you have this, maybe like target 1. Okay, target 1, maybe target 2, and then target 3 could be here, so that by the time price is making here, you can also be locking your profits while price moves down. So that's basically how simple you can trade continuation breakout. Okay, so using the knowledge of trend lines. If you did not watch the previous video, then you want to go back and watch it so that you understand the concept clearer. So that's what I have for you today, guys. Thank you for watching, and remember our book, where I'm writing a course on how to become a profitable trader. Right, so this is not just about one single strategy, it's a complete course that has to explain everything about trading, psychology, risk management, how you can manage your trades properly, and in 3 months time you make money consistently in the trading, or trading the financial market. So make sure that you stay tuned. We have a Telegram channel where we are going to update people on how how far the book is going. So we have already written about 80% or 90% of the book, so we just have a few hours left to put in the work and the book will be published. So make sure that you join our free Telegram channel by checking the links in the video's description and the pinned comment, so that you get updated anytime new information comes up. So thank you for watching, guys. See you in the next video.